If you look back at the last 18, 19 years, our three core pillars broadly of sectors that we've invested in and have seen exits in have been consumer, internet, software, and financial services. The single biggest thing I have seen change in the eyes of the founder and in the eyes of the investor is that a strong belief that India can actually create 10, 20, 30, 40, $50 billion companies. Well, first I gotta tell you, we as Indian consumers are spoiled, man. We're crazy spoiled. We want things cheapest and we want them now, and we are actually getting serviced by some wonderful entrepreneurs. So when we talk to our friends and families in other parts of the world, I mean, it almost feels unreal. I think it has created a whole new behavior where people now can come to expect things to be available to them as and when they need it.
How do you look at not partnering with a company?
First and foremost, it doesn't matter what your past successes are. The day you start getting complacent about it is probably the day you start finishing up. So,
hello. Before we get started with this episode, I quickly wanted to share that we are now a part of the Zerodha Media Network. Thank you so much for watching.
Welcome to the Indian Silicon Valley podcast. I'm your host, Jivraj, and today I have with me an extremely special guest. This is an investor that I personally want to learn a lot from, and I'm sure all of you listening will have an incredible time. Join me in welcoming Mr. Mohit Bhatnagar, who is a managing director at Peak 15. He's the man who's invested in companies like Zomato, Meesho, Freshworks, Cars24, and many others that you've heard of. Thank you so much, Mohit, for joining me today.
thanks, Jivraj. Pleasure to be here.
I'm super glad to be doing this because as a student of Indian technology, I think you've been a part of it for the last 2 decades almost as an investor. And I want to condense all of those learnings in the next 60 odd minutes so that we get the benefit of not having to do the mistakes that you have and learn from the wins that you've been able to compound over the years. Where I want to start, Mohit, is the fact that, hey, just time gives you a lot of benefit in terms of hindsight, right? The learnings in hindsight are plentiful. If you could condense how you've seen the Indian ecosystem evolve from the year that you joined Sequoia back then, now Peak 15, how have you seen the Indian technology landscape evolve from questions around will Indian companies go public, will there be enough startups, to now being a mega year for Indian startups in terms of IPOs, etc. How have you seen the ecosystem evolve?
I'll say belief. I think when we all were out there I started all the way back in 2006 when Sequoia got started in India. There was potential, there was hope, there were stories that things could play out in this certain way. But I think the single biggest thing that has shifted over the last 20 years has been just the belief. A young man coming out of IITs today is not looking westward, is not looking to leave the shores of our country, but honestly just believes that his best career prospects or her best career prospects are right here in India. Any founder that gets started now doesn't believe that they have to be aping the West, but they actually believe that they have enough role models right here. When Dipinder started, I'm sure he looked up at InfoEdge and Sanjeev Bhikshandani, who was on his cap table, and said, what a success story. It's a $2 to $3 billion company, one of the most successful tech startups. And today, as we know, Dipinder is now $30 billion, is just joining the BSE Sensex, which in itself is crazy in terms of marking, the start of tech startups in mainstream Indian corporations. But any person starting today will honestly believe that they can do better. They can now be a $50 billion company, a $100 billion company. So the single biggest thing I have seen change in the eyes of the founder and in the eyes of the investor is that a strong belief that India can actually create 10, 20, 30, 40, $50 billion companies.
Got it. No, I think that's super helpful. Belief definitely summarizes it well. I've grown up in the era where it's been India's decade, and it's India's decade for the longest time, and now it's arrived. It feels like it's such a place of fortune to be. But things have changed, right? Like, I think it's a deepened market. Can you maybe paint a picture for us in terms of, what were the kind of companies you were scouting for in terms of maybe spaces and talent back in 2006? And what does it look like now? Because questions around internet users, internet shoppers, consumption in India, but now questions around AI, how will we capture it, etc. exist. How have you seen this differential?
I'll tell you what's same and I'll tell you what's different, right? If you look back at the last 18, 19 years, our three core pillars broadly of sectors that we've invested in and have seen exits in have been consumer, internet, software, and financial services. each one of these sectors started off with more boring, more manual, more offline businesses. But over the last 20 years have just got a much bigger tech angle to it. So for example, consumer brands that we were investing behind in those days were very shop model. Offline was the only way to build these models because customers were just not online.
Yeah.
And as we saw the advent of the mobile internet and the ability to discover and shop online, of course, a lot of those businesses started building their businesses online. And then interestingly, a lot of them went overboard online and they understood there were benefits of actually going offline as well. So the sectors remain the same, which is it's a consumption, consumer business, but now it sort of services customers wherever they are, either in an offline or an online environment. Financial services, loan officers, literally in the microfinance world, which was one of my first set of investments, you had loan officers visiting homes of folks to try and count the cattle that they had, to actually see the assets that they had at home, to then underwrite a loan. Now look at India Stack and look at the ability that we have to be able to underwrite people from far away just using data, if you will. But at the core, the business does the same, which is India is underinsured, penetrated for so many different wealth and finance products. But now we use a tech-first way to actually address the same need. Software, India probably has one of the world's largest developer populations. And we built great IT services companies on the back of that. And then those companies said, no, we've got to be a product nation. So we built great application software and workflow software from India for the world. Now, each one of those developers is thinking about how they can actually, really ride the wave of AI. And so we're looking so much more at both LLMs, but more importantly, even the applications that are going to come. So many ways, the problem statement is the same in terms of the consumers wanting more services, better services, companies looking for, automation, productivity, using software, and, just the white space that exists in India for so many financial products. But how they're being serviced today is so much more different. And we can get into some of the examples as we go along.
Oh, for sure. I think that's super helpful. Let's perhaps go into the examples. I agree. There have been landmark investments that you've made over a period of time. And I think the biggest badge of honor for an investor are its portfolio companies, which end up doing well. Can you talk us through some of the major ones, maybe a Zomato, Meesho? What went behind the scenes at the time of making the investment? What was the worldview? And how surprised have you been, if you have been surprised with the outcome?
First, all credit goes to the founders. I think they're the ones in the trenches fighting the war every day and winning the battles that matter. I think the investors are privileged and fortunate to actually have a ringside view to learn as that happens. So full credit to Deepinder, Vidit, and all the other founders, and a big thank you for letting us sort of be part of their journeys as we did it. I remember in the case of Deepinder and Zomato, when we first intersected with the company, it was actually a dining out business, and it had actually started off, as you know, popularly from the menus being scanned and so on and so forth. But the thing to really remember was there was not a single dollar spent on marketing or advertising. There was this word of mouth that existed around the business, that people were talking about this company, were using this company, and that is how I at least got to know about it first. And then Sanjeev, who's a common friend, introduced me to go meet Deepinder. I met him at his farmhouse. I actually had to spend 10 days reverse investing to him, or reverse pitching to him, I should say, as to why I was going to be his right partner. And there's a famous story he tells common friends is, he called me at 7 a.m. in the morning hoping that I wouldn't show, and it was a test, and I sort of showed up with some coffee, and then we obviously spent the next few days. In fact, I was supposed to go for an LP visit that's very weekend when I met him, and I actually called my partner Shailendra and others, and I said, no, I'm not only not coming for this LP roadshow that you guys should carry on, but I need an IC on Saturday. And we really need to, intersect and meet with this founder. And so Deepinder came in and presented to us on one weekend. It was a very, very quick close that we did. And we're glad to have crossed that line. Right after the investment, after the Zomato investment happened, I went back to that same farmhouse, and typical Zomato style, there was this massive, I think 20 feet by 30 feet black poster right up there, and it said, Zomato eats Yelp's lunch. And you could just see the audacity and the ambition in the eyes of this young company, where we had just about put in, call it a very early small check, when they must have had a few, very early days, a few users. And here already was a founder who was basically trying to just go dominate the world and be right up there with what then used to be a much larger company. And of course, we didn't win the US. And of course, Yelp continues to be bigger than Zomato in the US. But it just gives you an insight into the ambition and the fearlessness that, Dipinder, I think, epitomizes so well. And that's why I'm fortunate to be part of so many journeys.
Yeah, no, that's so well explained. Did you at the time think it'll be a 30 billion outcome?
Oh, it's crazy. I got to let you in. I was just recently looking at this. We write memos that we discuss at our investment committee. And I remember in this first memo that we put up, the business case or the investment case for Zomato, we said it'll basically grow to a few tens of millions in India. And then we would basically go into these 5-6 other geographies, all put together at scale. When everything went perfect, this would be a $150 to $200 million company. And we're going to be overjoyed with that. And this is going to be massive success. Everything changed, as we know, right? Yeah. Not only did the classifieds business, after a while not scale, but food delivery, which was not even in our memo, not even anywhere on the horizon, is the reason the company is as successful. So it just shows you when you start off with venture investing, you are really backing a few market structures, but most importantly, you're backing a founder and his team to be able to morph, change, evolve, adapt, because this is a long journey.
Yeah. Wow. I love that. That's super well articulated. Can we also come to Meesho? Because Meesho is a very different company by contrast, right? They've opened up a commerce channel for an audience that a lot of us harp upon, but we don't know where value will be created. Meesho, of course, has done it magnificently. What was the thought process like when you met with it? What stood out between Vidit, Sanjeev, all of those folks, and what was it like?
Again, just crazy, right? Think about it. When Vidit and Sanjeev were starting, you already had Amazon and Flipkart duking it out. Hundreds of millions of dollars being invested to make e-commerce come alive, fighting each other, so that the Indian consumer would choose them. And then here comes this small little startup that says, hey, me too. I really want to be able to, service India's e-commerce needs. So again, I would just underline the audacity, and in that case, maybe just the naivety of being able to dream to do this. What attracted us to do it was they were doing it in such a smart way. They were using resellers, and they had the insight that basically said, a girl who leaves Shillong and comes all the way to Delhi is some sort of an influencer to all her friends and families back in Shillong. So when she says on her WhatsApp group that this dress or this skirt might look good on you, she's actually doing a lot of the assisted selling that what a high CAC business does. And so using resellers who were aggregating demand and drop shipping the product directly to the end user who was buying it was a really smart way to scale and get orders online without actually having to pay very high CAC. And so that's what attracted us when we first started. But I'll just digress for a minute, and I'll come back to Meesho. I grew up in the telecom world.
Yeah.
And I'll never forget when I had my failed startup in the US and I came back in India to work for Bharti. I still tell friends, Bharti was more entrepreneurial in 2002 when I joined them than my own startup in the US. And I learned one thing. I remember there was a media person who asked Sunil Mittal, how are you ever going to make money in India? Vodafone in the UK has a 50 pounds ARPU. And the same vendors sell to you like they sell to Vodafone globally, the Ericssons and the Nokias. Your spectrum costs are no cheaper here than they are anywhere else in the world. So how are you ever going to make a profit when they themselves are struggling with your $2 ARPU? That was a good question, I thought, right? If the average customer only has that much of a paying capability. And his answer was amazing. He said, I think of Bharti Airtel as a minutes factory. We manufacture minutes and we sell minutes. As long as I can drop the cost of manufacturing that minute faster than what the market is forcing me to drop at the cost at which I can sell that minute, then the marginal cost and the marginal revenue always works in my favor. And that was a very insightful comment for me because it showed me that if you want to win in India, you have to win with 300, 400 million customers, all paying you a little bit. But when they pay you, that should be profitable. And the scale that India operates at, when we get to hundreds of millions of dollars, creates very large companies. And so if you come back to Meesho, Meesho very smartly from day one said, my customer cares about price and value, and not so much about the convenience of delivering to you the next day or in 45 minutes. I will use that as my North Star in the company to make all my decisions. So for example, because a 300 rupee order of a kurta plus one more piece of apparel to be shipped from Gujarat to Shillong is an expensive affair. They did not have any logistics of their own. It's a 1,000 person company versus the incumbents who have closer to 30 or 40,000 people. And because they have a lean and mean cost basis, they make money, and they made money on every order from day one. So the contribution margin in the case of Meesho was, so what if I'm only selling a 300 rupee AOV? In fact, I'm going to do everything in my ability to drop that 300 to 250 and 250 to 200 so that I can keep sort of unpeeling the next 50 million users of India who are still going to the offline substitutes, but I'm going to bring them online because it's just much cheaper. The value is much better. And of course, the selection will be wider on an online platform. So I think this unique thing about India attracted me to Meesho, which is you want to build a company that can actually use price not as a tactical thing, but as a strategic thing. But if you build a lean and mean cost structure, it allows you, and you can eke profits at that. Those are the moats that people talk about. I could almost tell you this, but it is so hard to do this in terms of, they will actually say no to a certain product category if they're not able to actually, drive the cost down of that so that their consumers can benefit from it.
That is wonderful. I think I love the articulation. It explains it really well. Since we're on the subject of maybe portfolio, there's also, given the benefit of, being in the moment and seeing how India was evolving, I'm guessing you saw the e-commerce wave, you saw the education wave, you saw multiple things, right? Are there things that you were particularly wrong on, or, opportunities that in the moment felt like they were exaggerated, but you didn't sort of go ahead with?
So actually, e-commerce again, I remember Flipkart when it was early and young, it came across RICs, and I think we got it wrong. And the reason we got it wrong is because we actually made a visit to China because we were part of the Sequoia global network. And our lessons from the China visit were two. One was the cost of logistics in China is just so much better than we had it in India. And perhaps it still is more efficient than what we have. But despite that, the J curve, as in the losses that were being experienced by the e-commerce players in China, think Alibaba and JD and all of those then, was ridiculous. So in 2011, 2012, when we actually came across these early e-commerce companies, we could not fathom there would be 100 million or 500 million or $1 billion available to our Indian founders to be able to actually build such a large company. We got that wrong. Clearly, the whole world was willing to come into India when the opportunity began to inflect.
Got it. No, that's super interesting. In terms of software, right? You invested in Freshworks, and we're now seeing a very different realm of software. All of software is now AI first. There's a lot of chatter around, hey, will India be able to capture the global markets because a lot of AI is just fundamentally a global maxima. How have you seen the evolution of software from India? We've been services first, of course. We've taken over with the likes of Infosys, the world. Then we've seen Freshworks, etc., which you've been a part of firsthand. And now we're in a different wave. How do you see it from your lens?
Look, India has a right to win in software just because of the developer base, right? If you are developing, let's say, developer tools, well, in many ways, you're doing it for yourself and your brothers all around you. And so you have a really good sense of what the needs are and so on and so forth. So for all those reasons, I think India has a massive reason to win on all things software. In the early days, I think price was one of the reasons Indian companies are going after. Hey, we can do this thing for you at a more valuable way. So if you look at Freshworks, and the reason they succeeded in the early years was very interesting. Girish had this insight that said, look, it costs about $200,000 to hire a US salesperson. fully loaded with everything and travel, maybe costs you $350,000 or $400,000 to have a good US salesperson. Now, if you're going to have someone as expensive as that, you're obviously going to give them a quota that's about $1 million or $2 million of sales quota. Now, if I receive a sales quota for $1 million or $2 million, what am I going to do? I'm going to go and try and find 10 companies that I can sell a 100K deal to each in order to meet that quota. And that's the way the software industry had operated on forever. You had all these salespeople, bag-carrying guys who were basically going after larger clients who could pay 100K or 250K so that the salesperson could meet their quota and hit their many $1 million quota hits. Here comes Freshworks and says, you already know you want help desk software. You're already looking for it on the internet. You know what? I'll just sort of do a little bit of performance marketing and make sure that I'm in your consideration set. Now that I'm in your consideration set, I will close you remotely via inside sales from Chennai. And because my cost basis of actually reaching you and closing you is so much cheaper than everybody else, I am able to profitably, and that company has always had an 80% plus gross margin throughout its life, I'm able to profitably service a middle segment of enterprise customers in the US that were forced to not be able to get world-class software. So not only am I giving you world-class software, but because I run a lean and mean shop, I will actually be able to service someone with a $5,000 or a $10,000 or a $20,000 budget. And I think that was the first reason people like Freshworks and Zoho and everyone else really succeeded, not by selling cheap software, but by actually working hard at their own cost basis so that they can have world-class software delivered at a price point that really made a lot of sense for their own margin structures. Then the horizontal software, wave played itself out. And that's when we saw a lot of vertical software plays come in. In particular, if I had to pick one, Innovaccer is a great success story from India. It's not in our portfolio, but it's someone I admire. Not only did they focus on healthcare early, because US healthcare is a tough puzzle to crack, but they've stayed the course on trying to crack it. And instead of just using software to drive productivity, they're actually in this case using software to actually drive revenues and better yields. And so it was very interesting to see these vertical software solutions come around where they were saying, not only am I going to make you more productive, but I'm actually going to help you increase your own revenues via certain leakage points and others getting blocked and so on and so forth. So that I think is a very interesting new play that then came into place. With AI, I think it transforms everything. I personally feel it's going to disrupt many, many companies and many, many industries. And if you ask me if there was one thing that we're most excited about, it is about AI and our role in being able to create a very large AI ecosystem, both in India and in the US in a cross-border way. Look, LLMs were a thing. And we've invested in a company called Sarvam, which is India's Indic language LLM built for India, voice first across all our different languages and dialects. And I think it'll do really, really well. But the real opportunity in India, at least the larger opportunity in India that I see, is the application layer. We aren't seeing enough of it, as people say today. I think just watch the space. I'm a real optimist and a believer that India's application developers will not lose this opportunity. We're investors in InVideo. It's a company that we had invested from the Surge program. InVideo, for those who don't know what it does, helps you basically create videos. So if you're an influencer and you want to just talk about your weekend in San Francisco, very quickly it helps put together a video to talk about the Golden Gate, the food, the Napa Valley, and so on and so forth. You put that on social media, you earn some money, and you go about doing it again. Well, this company did well for a while, but these videos that were getting created were only getting created in this quantity, if you will. And the number of use cases were what they are. Here comes AI, here comes ChatGPT. Sanket and Untold have done a wonderful job of embracing the opportunity. They sat back and said, how do we unlock all the bottlenecks that exist in creating videos? Turns out, to really create a nice video, you need a nice script. But it takes forever to write a script. Well, guess what ChatGPT does really well? And so by embracing ChatGPT and many other LLMs, what they've basically been allowed people to do is they create amazing scripts really quickly, which then creates a whole host of other videos very, very quickly. The company has gone from $0 to $50 million in 2 years.
Wow.
$0 to $50 million in 2 years on the back of its AI product that has really, really scaled nicely. And now the use cases are teachers that are using, in video to create videos for their classroom, or realtors using it for actually putting up houses on sale, and many, 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 many horizontal use cases. Because one thing we know for sure is video is the new format that folks will now engage on. So it's a good example of an Indian company that was building software only, really embracing AI to really supercharge its value proposition. I think you'll see a lot more of that as we go along.
That's lovely. I want to play devil's advocate here. If a large part of the AI wave is dependent on great talent, large data sets, maybe fundamental models, etc., right? And there was a large debate on it. Maybe the US has an inherent advantage and the customers are there. What do you think we can do better as an ecosystem to get there, if we are not already?
Belief again first. I think first we got to take that thought, put it into a little...
and throw it away.
Throw it away into a dustbin, right? We've got to believe that having the world's largest developer and software base means we have a natural right to win in there. Once we've gotten about that in our own heads, I feel like you can take any industry, take healthcare, for example, take financial services, for example. This thing that you just talked about, most banks, most healthcare institutions have not allowed for their data to actually get out there and be generically available. So it's not like the US AI companies actually have instant access or easy access. In fact, I would argue many of these sectors are actually unregulated in India. There's a reason RCTs and things like that actually happen in India, because we're still coming up the ladder in terms of some of these aspects.
Sure.
I think Indian companies can go after both Indian customers as well as global customers. Maintain confidentiality of this data, ensure that this data is used, responsibly, use the right levels of anonymity and so on and so forth, but build amazing global platforms that allow the next scan to be accurately analyzed using AI, to allow for an AI tutor to be able to teach, not just in the English language, but in all these other languages. Think of your, and sorry, Deep Kalra, but think of your OTA experience. It's remained unchanged from the from to for so many years. I look at all these consumer applications that you and I use today, and I think they can be so well reimagined using AI. If AI knows where I'm going to, can you imagine the experience it can throw up for me in terms of, using video and all the AI generated content to just help me actually transact. The ticket just happens to be the transaction, but they would open up an entire new travel experience for me. So I don't think we've seen all the applications that we can across, commerce or even travel or anything else yet.
No, absolutely. In fact, right on that chair, I asked Mr. Deep, what will be the make my trip of tomorrow, because it definitely feels somebody will build it. And he was also that, the incumbents will have to innovate fast enough. But no, thanks for clarifying. I do think that, broad narrative also feels like we're a bit behind, but we will capture it early enough and the belief will stay. I want to also understand that a lot of this is in venture, access matters, right? And you've been with perhaps arguably one of the best firms in the country. So let's presume you had access to some of the best companies, and you do currently as well. What does it go behind then passing a company? Because the cost of emission in venture is perhaps higher than the cost of participation. How do you look at not partnering with a company, right? Like what is, you mentioned Flipkart, but what are more examples where you said that this is not going to work out and you were surprised?
Yeah, look, first, Mike Moritz and others taught us you're only as good as your next investment. So first and foremost, it doesn't matter what your past successes are. The day you start getting complacent about it is probably the day you start finishing up. So I think a healthy paranoia is a good way to come to work, to make sure that, as you walk into the office today, you're going to meet this founder who's going to build the next Zomato, the next Meesho, and so on and so forth. And you've got to have the mindset that's, willing to bat on the front foot, to dream along with the founders as you go do that. Some of our errors of judgment have been, in many ways, each one of us is an individual that has certain strengths and weaknesses. My strength, I've been told by others, is authentic relationships. is being able to really spend time with the founder, understand the founder's motivations, get a sense of whether they will have what it takes to actually go through the inevitable downs and ups that happen in a startup journey. Do they have what it takes to be able to assemble a world-class team around them to really go for it over a decade or two? That also becomes a negative because I have these stereotypes in my head that tell me what kind of founder might win in a market like this. I met Adit at Zepto, and in the early days, one was I was, and this is again a weakness for me because I go so deep and I go so native with my founders. I think of myself like a Zoman myself, but how could I invest in a competitor which was developing at that time? Once we get over that, I was obviously wrongly using a lens to say, here's a very sharp, very smart 20-something entrepreneur who would be perfect for building a consumer internet company, but perhaps not the best background or pedigree for someone to manage hundreds of thousands of delivery workers or hundreds of thousands of warehouse workers or blue collar workers. That's going to be the grind. That's got to really take someone out in the field and who's built operational businesses. How wrong was I? So I think our own strengths in this case of being able to assess teams and then be able to dream that there can be exceptions. And that's what these founders are. They're exceptions. They're able to, go against the grain of what many of us feel is the right way and prove us all wrong is where I think I've learned most of my lessons.
That's lovely. On that subject, perhaps also Q-commerce has opened up this entire different form of transactions that was perhaps 3 years back a very, very difficult thing to imagine, right? How have you looked at that market, and so much of the job as an investor is perhaps to predict the future. Are there any future-looking assumptions about where this heads in your head that you can share with us?
Well, first, I got to tell you, we as Indian consumers are spoilt, man. We're crazy spoiled. We want things cheapest and we want them now. And we are actually getting serviced by some wonderful entrepreneurs. So when we talk to our friends and families in other parts of the world, it almost feels unreal, the amount of money you have to pay for any sort of experience. So we're spoiled silly. And thank you, all the founders who are able to be so ambitious for us. I was talking to Albinder some time back, and he when quick commerce started, there was genuinely a question, like, really, like,
do we
15
need it?
minutes? Do we need it? Right?
Do we?
And I would say that doubt
It's been
even
proven.
sat in his head. Like, do we really need it? Like, is 20 minutes not good enough? Like, what matters? And he walked me through a really interesting set of experiments that he had done with the team, where essentially what they did was, they offered the same product to perhaps the same demographic at 20 minutes, at 18 minutes, at 16 minutes, at 14 minutes, at 12 minutes.
Okay.
And what blew them away was the conversion factor at some of those, faster times was spellbindingly better in that. Now, did it really matter to that person that they got something, call it 4 or 5 minutes later? I don't think so. But did it make that person go ahead and impulsively buy? Because if I just press this and by the time I finish, doing a small chore in the house, something shows up in my house? Absolutely. I think it has created a whole new behavior where people now can come to expect things to be available to them as and when they need it. And that, I think, has changed user behavior, where an expectation has been set with many of us across many categories now that is no going back from. So, yeah, I think this thing is actually the new way.
Stay.
It is here to stay.
It's about $3 billion today. Do you have a forward-looking assumption on how big Q-commerce in itself becomes?
Look, you're talking to an optimist. Okay,
I'd love to hear that.
Meesho itself, I think, does maybe 70, $80 million orders a month.
Okay.
Last I checked, and I haven't checked for a while, Zomato had got perhaps 20, give or take 20 million, folks who ate on Zomato every month. And I think quick commerce is in the single million numbers.
Yeah.
I think Meesho's got tremendous potential, let alone Zomato and Blinkit. Just think about our country. Even today, despite all the investments, despite all the ambition that our founders exhibited, it is still a 25 city, 25 town, driving most of their revenue. Yeah. Many of them have set up shop in the 100th city and town. It is still a small part of their business. When we started investing in India, it was perhaps $700 GDP per capita. It is today 2,500 GDP per capita. When we're having this chat 10 years later, it's going to be twice that at least.
Yeah.
We have not even started to see the consumption kick in real India and mass India. All these businesses will either do a successful job of reaching to those places and therefore grow substantially, or then will be disrupted by a Meesho-style business that knows how to capture that market. But the fact that demand is coming, I'm sure of.
Well, that's lovely. I love talking to an optimist. I'm feeling not so great asking this controversial question, but with Blinkit launching Bistro now, right? Food delivery is also getting disrupted. Do we need food in 10 minutes?
We should ask the people who are ordering, isn't it?
Will you meet a new player doing the same thing with equal enthusiasm?
I will. Okay. I will. And then you have to gauge their ability to win in the marketplace. But once again, I would not second guess a consumer who is willing to use one of these platforms, is willing to put their own money down to actually receive this. I would not take that lightly. I think the Indian consumer, for right or for wrong, has got very high expectations. And because of frankly, the low delivery costs that we enjoy in our country, we're able to service them. If you really think about it, right, a lot of this, someone said this well to me, it's not like 5-minute or 10-minute food delivery does not exist in the US. Would you be surprised about that?
Yeah.
What do you think a drive-in is?
Fair.
So you go there, you order something, literally, without you leaving the seat of your car, you get food in your hand for you to munch as you go for your family vacation.
True.
That's less than 10 minutes. The difference is we have the ability to actually get that food to your house because of our delivery costs. But the need is there in the US and in India.
You just service differently. I love that. That's super interesting. I'd love to also maybe understand, right? If there are so many insights around the Indian consumer, which is a derivative of the companies you invest in, what are some things that you feel are specific to India, like quick commerce? Like, could you expand upon what you've learned about the Indian consumer, which was in 2006 versus who he is or she is in 2025?
I think one obvious one we all are talking about is the premiumization of brands, right? My dad was plenty happy with his VIP. I'm going to be caught dead carrying one of those. Oh, I can't quite afford a Tumi yet, but a Mokobara, that looks pretty good.
Yeah.
So this premiumization of brands across most categories is something that we are seeing. And I would say it's almost like something flipped this year, whether it's Mosaic Wellness that we are investors in, it's Minimalist that we're investors in, or Whole Truth, or Mokobara. Across many, many categories, we've just seen a massive step up in terms of consumers wanting to get a more premium product in a category that they have been buying for a while. So
I love that.
That's for real.
Yeah, premiumization. Now, this has been lovely. I think we've covered a lot of ground. I'd love to maybe take a step back and get to understand your pure investor lens from a context switching lens, right? You invest across spaces, you do software, you do consumer, you do many other, you do healthcare as well in parts. How do you perhaps maintain equilibrium and depth in your head across spaces? What does it mean to do that? And alongside that, you're also the steward of the brand, right? Alongside your partners. How have you seen building an institution within venture? So 2 questions. One is the context switching piece within venture. And then what does it mean to build an institution within venture in India?
I would say when I was building up in this world, India was still a not as deep a venture market, and therefore we actually were quite broad in the set of sectors that we all invested in. I was able to invest in a Zomato and a Freshworks and something in financial services as well. I think the role of the generalist is over in the venture capital world. I think if you look at, let's say, the next big AI investment, it is going to come from a founder who deeply understands and deeply has spent time in that space, and an investor who understands the nuances of that as well. So I do feel like going forward, to be a successful investor in the early stage, yes, you need the horizontal skills to be able to try and understand a founder's motivations. Yes, you need the patience to allow the founder to have a few quarters or years where they're walking in the wilderness before they come right back. Yes, you need to have the courage along with the founder to go through these lonely periods when things aren't just working and you need to pivot. But I think beyond that, you also need to have a very nuanced point of view around how this industry might evolve, how you might actually be able to attract the world-class engineer that knows the most about that particular space that you're building in. It has become a lot more specialized. So I think that is one big wave that I expect to see keep changing as we go along. And in many ways, that's what dovetails into the building of an institution as well. I think the first thing we learned from Sequoia is things like you're only as good as your next investment. Things like you really need to keep raising the bar on yourself. You really need to be able to almost disrupt yourself. The only reason you will be not successful and will not exist 10 years later is because of things that you did not do. It's not the market's fault. So there's a lot of inward performance pressure that we put on ourselves so that we can actually just keep the bar high. And I would say a VC firm, like any other successful firm, is like a sports team. At some level, you have to constantly keep, no team is going to have 6 wicket keepers. You need to make sure that you are always attractive to actually get the top 2 batsmen in the country to come back for your team, and similarly a bowler, but you need this all-rounder. This funky pitch, needs a particular specialist to come in, and that's available to you. So it's a little bit of, designing the team to make sure that you can do both consumer brands all the way to AI startups that are perhaps today where the center of gravity is more in the valley and is able to have a corridor between the US, India covered well by a set of investors. So you really need to take a step back when you're building a venture franchise and say, first, performance matters, but winning the right way matters more than just winning. And so you need to have the right culture, because if you're going to have sharp elbows, then, goodbye to the team. And this is a very lonely sport when things aren't looking well. So, no one investment belongs to any one individual. It always belongs to the firm. So you need to sort of have that we culture woven in with this just innate curiosity to try and discover the next big winner, and then the winning mindset to say that, yes, you don't see it, but I think we can build something here. So for example, many people ask us how our investment committees go. On the venture IC, on the early stage seed and venture IC, if there are 10 people voting on it, we're looking to see not if there's a consensus vote of let's do it. We're actually looking to see if there are 2-3 people who are a 7 or an 8 or a 9 on the investment. And it doesn't matter if there are a couple of people who are a 3 or 4. It's more important that somebody who's closest to the investment opportunity, who has spent time with the founders, understand the nuances, really believes that this is a founder, despite all the questions that everybody else has, that you can maneuver and navigate with. So I think that conviction is what we're looking for when we sort of make some of these decisions.
I love it. No, I think that's super, super helpful. I remember I'd written a cold email to Mr. Sir Mike Moritz, and he responded, politely declined for the podcast, but he ended his email signature with anything is possible. I don't know if he still does that, but that sort of reinforced a lot of belief, and you start with that point. And I think there are many learnings. Why I was mentioning that is Sequoia and Peak 15 now has a very rich heritage in terms of, how you've established the venture ecosystem in the country. If you had to talk us through some of those pivotal points, right? I mean, in 2005-06, the firm started, you brought the franchise into the country. Since then, there have been more franchises created from within the partners who were at the firm. And now there was rebranding a couple of years back, right? How has that sort of like shaped your mindset? Can you walk us through how things have changed? And now you're a leader of the firm. You've hired other partners at the firm. What has that meant for you as a leader at a venture firm?
I think it's a great question, actually. It's a humbling question as well, in that, I'm an operating guy by my background. I spent time in large companies, building large teams and so on and so forth. And so I was, as I call myself, an accidental VC. I was never really trained to do this, unlike many of my partners who've actually grown up in the VC world. Really surprised me because there's plenty to go around in terms of economic wealth. Attracts a lot of folks who want to really be in that top 1 percentile and be able to sort of constantly, push the envelope, if you will. I think that's a good thing. My endeavor has been to try and marry that with this thing of, look, if you want to go fast, go alone. But if you want to go far, go with the team. And so the single biggest lesson I've learned around a venture capital franchise that is successful is it's got to be enduring, much like our own companies. Now, to endure over 10, 20, 30, 40 years is definitely not about one person. It's definitely not about one great investment or one great vintage. It's about the ability to actually have this tribal knowledge that is baked into the team that passes from generation to generation. That's the aspiration. In many ways, this might sound crazy, but our mandate when we were part of Sequoia was to be the best damn VC firm we could be, so that we could finish the pearl necklace for Sequoia, where they had a winning franchise in China. They obviously are so successful in the US, and now in India we were sort of filling in the different geographies that matter. But now as Peak 15, we have a mandate to just be the best damn VC firm, period. So suddenly we actually have a mandate that says, hey, LPs in the world have an opportunity to put money in any VC firm. And if they're choosing to invest in Peak 15, of course, we have to do really, really well in our home markets like India and Southeast Asia, which we've, bumped and bruised our way to learn all the lessons that are worth learning so that we can keep succeeding as these markets get more fertile. But we also just need to deliver world-class return, period. It's no longer just being enough to be just a national champion, but you really need to win globally. And so I feel like when you have that performance mindset, you marry it with a little bit of an enduring mindset of doing this for many, many decades. It takes that unseen thing called culture that binds you through these periods, sees you through these really hard times, and then allows you to propel forward when some of the people are gone, but the culture sort of keeps rolling the ball forward. So that's the attempt. We'll see how far we get. We had a beautiful exercise this year where we wrote down our 10 values. And I think it was from the soul that we all came forward and we tried to capture some of these learnings. I'm happy to make that available to you separately. But interestingly, our values are not, our values are balanced. So when we say winning, no, it's winning the right way. It's being 100% open, but 1% selective. So it's almost like saying, look, there's a contradiction, there's a yin and yang in everything. And that's been our biggest learning, that it's so easy to, over-index on this end of the pendulum or the other one, but you need to have this soft stance to be able to almost look at it through a little bit of a blurred eye to see the bigger picture, so that you actually can endure and do this over and over again, rather than just react in a very transactional manner to anything going on in the market in that particular year.
That is super fascinating. I love that. A lot of food for thought as well, and a lot of depth. I do remember there was a fact that I think 25% of the Nasdaq perhaps is made up of companies that Sequoia's invested in. Do you think you have a benchmark of that kind when you could index, let's say, BSC companies from the Peak 15 portfolio?
I was doing that math as I was coming over here.
You were?
And I was just thinking about it, because I think you're right. That is the point of arrival, where where we don't do startups that just create great returns and 10xers and 20xers for the VC firms, but you actually create these companies that go on to live for decades as public market companies, and they provide all the jobs and the economy benefits as a result of them being successful, and then over time they become a sizable part of the Sensex. So look, I haven't done the full math here, but in e-commerce itself, right, between your Zomatos of the world and the Meeshos that'll come in, your financial services companies that are in there. Today, I think it's somewhere in that $100 billion mark, right? Depending on who's got public or is getting close to getting public. Maybe that number grows to $200, $300 billion. When you see a Zomato going from, it's been less than 15 years, to go from, call it $0 to $30 billion of market cap. If you talk to Dipinder, I think he's as pumped today as he is then in the past. So he's thinking of nothing short of
100.
Exactly. You said it, not I.
Yeah. Now I was doing my math, and I think there are about 35 to 40 unicorns, which out of 110 is quite the proportion, if you would just take that math, right? So I think that's something. But I want to have a final question on this piece, right?
But I'll tell you one thing. I'm not a fan of the word unicorn.
Yes, tell us more.
The reason I say that is I think that did us a little bit of a disservice. It was this one monetary, it was this one thing that if you crossed $1 billion as a private company, for some reason, you got a medal. Now, in a private company, all you need is a willing buyer and a seller for one share to actually hit that. And it's not a real number. In the public markets, it is, because you get traded day in, day out, and you have to look at long-term performance here. The number we like and the number we showcase to our LPs is the revenue number, not GMV, not some artificial metric, but we say if a company in India crosses $100 million of real revenue and is forecasting $150 or $200 million of real revenue, well, that company can probably go public in India at some number short of $1 billion. So what we look at as portfolio performance is we have about 43 or 44 companies today that have crossed over $100 million of revenue.
Oh, wow.
We have about 70 plus companies in our portfolio that have crossed over $50 million of revenue. I think about 22 that have crossed over $200 million of revenue.
Wow.
When you see companies get to that scale and size, then I think they're real franchises that are here to last and can actually go to the public markets and sort of be profitable and get to the size and scale that then comes into your math. So revenue.
We will index that. I'll look up that number next. But on Peak 15 itself, right? Like the name is inspired from summits, from your passion of mountaineering, and you wrote that essay also, if I'm not wrong, right? Talk to us about what that means, right? Like how much of the name, the culture is something that you have put your thought into, and why does that matter to you personally as an investor?
So first is it's ours.
Of course.
It was an unbelievable coming together of our entire team to actually find the brand. We went through about 1,000 names before we ended up at Peak 15. It was really hard to get everyone to agree to a name. It was equally hard to even get the digital assets for any name that we were looking for. But yeah, fun backstory. I was actually at Everest Base Camp. And I was not able to get Shailendra's call. And then when I came back to Kathmandu is when he said, let's talk. We need to talk. There's stuff going on. And, we then went and spoke to our US partners and from things progressed from there. Peak 15 for everyone else's benefit. When the British came around and they were, making the maps for the Himalayas, they just arbitrarily came and named the peaks, Peak 1, Peak 2, Peak 3, Peak 4, Peak 15. It was only much later that people realized that Peak 15 was the world's highest mountain called Mount Everest. It also is anchored and rooted in our geography, which allows us to say, this part of the world is somewhat undiscovered in terms of the global venture capital landscape. And so Peak 15, before it's well known as Everest, is a good way to sort of think of our journey as a country and a VC firm.
That's lovely. I'm so glad to have heard it. I know you've articulated it very well in that essay, but it's so glad to hear from the horse's mouth here itself. Let's maybe extend this a bit more. During the lead up to the episode, I was, talking to a bunch of folks, some colleagues, some ex-colleagues, some people from the founder community, and they distinctly highlighted that, hey, Mohit's one of the highest EQ investors out there, really values founders, very humble, very people's person. In fact, a personal anecdote is the first time we spoke on the podcast, you questioned me a bunch, and it just showed how involved you were in the process, and it was not just supposed to be an interaction. Talk to us about, I don't know if everybody's like that, and this is with all due respect, everybody has its strengths. What do you think your strengths are as an investor? Why do you value the human aspects of what you do, and how does that translate into the work that you do?
I think it's fairly simple, and I guess it's one of those things that you're just grown up with, and so it comes a little bit more naturally. It's hard to explain it analytically. But for me, authentic relationships are the bedrock of building trust. And unless you have trust, I can't see how you can build that enduring company or enduring firm or enduring anything. And so it is clear, if I don't know you, I will never be able to really understand you. I will never be able to understand that, you had such a tough morning on a personal issue before you even came into work. And how could what we're talking about, profits or margins, even be that important to you today in a 10-year journey of mine with you, if I haven't really bothered to get to know what's going on with your child or getting to know what's going on in your family? And so for me, that's very natural. I feel like if this is a well-kept secret, the single biggest thing I have gotten, and I certainly have gotten more than I've given at Peak 15, Sequoia, and to the venture universe, is the friendships. Whether your company works or doesn't work, I get to spend 10 years with you. Can you imagine how special that is? One of my first investments was in a company called Prism Payments. Loney Anthony and his group of folks, I've taken my dad along with Loney and his family for FIFA for the last 2 times. And my dad's 88 now. And, that whole troop has become our FIFA football grouping. Jiten, Amrish fit into that same thing from the early days at Citrus. We've had shared experiences with most of my founders, some that can be on record, some that can't. But I think the friendships that you create are the really biggest gift that you get. My own partners, I have 12 partners. We're 12 of us here. Shalinder, GV, and I started a few weeks away from each other. To your point, we came into a market that had a few 100,000 internet users. We were selling the promise of India way before it really was able to materialize. And you went through all your hard knocks doing that. And so, just being in the trenches with people over 10, 15, 20 years just allows you to build relationships that transform you.
That's lovely. No, I think that's, again, the articulation is just extremely fascinating. The other side to your personality is valuing impact, philanthropy, and you've started ACT as a culmination of many folks coming together in the venture world for tech-led philanthropy. You value impact. What is that side to you? In fact, the reason we're here is also because Neil connected us, and you've been supporting Neil for a long time. He speaks extremely highly of you, and we've had him on the podcast as well. Talk to us about what that side to your personality means.
I guess I've always been geared with a little bit of this in my head, perhaps from parents. One of my earliest investments was in Ujjivan Microfinance. And I remember after we made Ujjivan Microfinance basically gave loans out to folks in rural India. And I remember there was this point in time where Shamit, who was the founder, very successful commercial banker, had started this inspired by Muhammad Yunus to alleviate poverty using this model of microfinance. And here we were capitalists who had actually supported him. And we were in the room and there was this moment where, the loans weren't getting collected. Perhaps there was a natural disaster or something else that had happened, but the loans collections weren't on plan. And I remember Shamit really making it clear to the team, talking about how, look, we're here to alleviate poverty. But the only way we're going to be able to do that is if we're going to be able to scale this company and make it go public and become a bank one day. And the only way we're going to be able to do that is if we run a very efficient and a very successful collections business. Mm-hmm. And so in order for us to achieve our long-term plan of alleviating poverty, I need you guys to make sure you go deliver on actually getting the collections in place so that we can have the best damn financial metrics and be attractive to investors like, the ones that we have sitting in the room. And so for me, and then he, used to have a book an annual report at the end of the year, which if you flipped it this way, it had all the financial metrics. And if you turned it around, the double bottom line was, all the great work that we were doing. And I saw it firsthand, when the Andhra crisis hit and microfinance went through all its crises, because Parinam, which was their nonprofit that they built alongside Ujjivan, had actually given grants and not loans to the women who did not have livelihoods and could not pay back and had actually built schools and public infrastructure. They were the ones that actually got paid back, when cash was tight. And so you see this fine balance of if you do the right thing, it actually comes back to you in many ways that you're not expecting. Girish at Freshworks, along with building a brilliant company, has always focused on, building out Madras Football Club. And, he has a great return to work for female employees effort. He's done a lot around, just computer science training for kids in that part of the country. Feeding India, what a great initiative from the Zomato guys working hand in hand. Neil himself getting inspired by that and all his lessons in Europe to actually create Robin Hood Army. I'm a little bit of, I think I can actually create a lot of influence from the companies that we partner with. Mm. If the same companies and the same founders were such special individuals, if they know how to create shareholder value, they also know how to create impact. I'm convinced of that. And if we could basically think, if we gave 1% of all these $10 billion companies, right, that's a $100 million foundation that each one of these companies gets created on. If we did that across 10 companies, that's $1 billion foundation that we can create. And the best part is not the money. The best part is it will be spearheaded by the entrepreneurial energy of these amazing founders who will be able to actually put it towards education and environment and healthcare and so on and so forth. So I'm a firm believer in founder mindset and entrepreneurial energy. And when COVID came about, it was a perfect storm in that all the VCs, Axel, Prashant, Shekhar, GV, Shailendra, many others from the Sequoia world, Sandeep Singhal from Nexus, Abhiraj from Urban Company, Dipinder, many others just came forward, and we came together to try and create ACT grants, which basically helped solve some of the oxygen problems and things like that the country was going on. In addition to all the wonderful journey of investing, I would say that whole ACT grants creation has been one of my biggest high points of the last 20 years.
I love that. Thank you so much for mentioning. And I'm sure like anybody listening, even if, we can help one person to be equally motivated and pursue a cause for impact, I think that'll be immensely powerful. And thank you so much for doing what you do. For the last couple of minutes, I have the final questions in terms of, hypothetically, if you removed Peak 15 from your life, what would Mohit be doing in an alternative world?
Oh, wow. I'm not done yet, by the way. But
yeah, this is very hypothetical. We're not expecting you to be.
I have this dream. My wife's going to kill me if she ever sees this. I love traveling. I love going and immersing myself in different cultures.
Mm-hmm.
So for the first 10 years of my work life, I lived in Taiwan. I lived in the Philippines. I traveled back and forth all over Asia. And I think the immense learning that I had in terms of being able to interact with people, I realized that time through that period that there's nothing like a country's culture.
Mm-hmm.
Who you are as a person has got a lot more to do with what size of city or town you grew up in, what company you worked in that influenced you the most. It's crazy, actually. You can find an American, an Indian, and a Chinese. You'll find them just incredibly similar if they've gone through the same set of life experiences. So life experiences is what I'm solving for and what I would like to do next if I had the time and the complete freedom. I would love to wake up January 1st in a new country, in a new job, and sunset it on December 31st and do that for 10 years.
Oh, wow.
Go into the creative arts for 1 year. Go into filmmaking for 1 year. Go in and do complete adventure sports. I love sports. I'd love to be the water boy on a sports team. I just want to go immerse myself as a apprentice in a star chef's kitchen and take all his beating for 1 year. I think when you immerse yourself and just go into a particular industry and you just meet people who are so different from you, the learning is going to be immense. So that's what I would be doing.
I love that. I've asked this question plenty on the show, and I think this is the most fascinating answer I've received. So thanks for that. I've asked you multiple questions. What are some questions you've been asking yourself lately?
So at the work front, it is about really making sure that our firm gets the AI wave right.
Mm-hmm.
On the people front, it's a ongoing journey to make sure that we have this fine blend of seasoned investors, young blood, capabilities in all these different sectors. So how do you balance and blend everybody into this one unified force? Easier said than done. I'm now 55. I am so sure that I want Peak 15 to be the platform and ACT grants to be the platform through which I actually will be able to continue expressing myself and working hard through. So what's that role for me that allows me to actually create enough bandwidth where I can actually use some of the lessons I've learned either in a non-profit world or in a for-profit world that can be actually better for the larger platform?
Very interesting. Those are very meaningful questions. I have two last ones on my end. One is considering I think investors have the best worldview, especially on a country, on an industry, and you're a firm believer in the India opportunity like all of us. Can you paint us a picture of what India looks like 5 years hence, maybe 2030?
Yeah, I think we'll see most companies growing in tier 2 and tier 3 cities much more than they're growing in the bigger cities.
Okay.
I think bigger cities would have plateaued and they've been fought to death and the margins removed out of them. But that's where the massive amount of consumption is going to be happening. I feel like these new sunrise sectors in India, like semiconductors and space technology and precision manufacturing, won't be small seed checks that we do, but they'll be the mainstay of what we're investing behind, because deep tech and India's need to actually, stand for real technology would be just needed by the rest of the world. I feel like the ambition of our founders will be to get to that 50 or $100 billion. The ambition for venture firms will be to be in the top 10 percentile firms in the world, which is nothing less than a 5x net consistently. And I hope some of us have been able to take a step back, reflect, and say, this is not all the things that only matter in the world. But some of us have also been able to reflect and say, it's not acceptable to have the air quality that we have in Delhi. It's not acceptable to have so many uneducated children sitting in these parts of the country, or the fact that for any major healthcare need, you have to leave your small town or city and travel to the big cities. I hope by then we've been able to actually also create what I call social unicorns, companies that have actually dominated health or environment for a social cause impact, and not just for a going IPO on the public markets. That's a world I'd love to see. Winners, where when I have a dinner at my house, I have a $50 billion CEO and a 50 million students population CEO who's doing it for impact, sitting in and mingling with each other.
I love that. That's an India we'll all celebrate, and we really hope and strive to get to. Thank you for sharing that. My last question, or maybe just like a very quick divergence, is, or maybe the last question is actually a stereotypical one, but I want to go back and understand if there were moments of doubt. I mean, till now we've discussed you in complete articulation of all of your thoughts. But when were moments that you weren't as convinced? When were the vulnerable things? What are you not telling us?
I felt like that yesterday.
Okay.
Yeah.
Why?
So you have to understand, most of us, at least I do, suffer from this whole imposter syndrome. That I'm going to get discovered. I can't believe how lucky I've been. It's unbelievable how the dots have all lined up. When I first entered the VC world as an operator, I was sure I was going to get fired after the first year. I was 100%. I was like, what have I done? I've sat around all day just meeting people. I've got nothing to show for this. Whereas in the operating world, you've got to hit, monthly, quarterly, annual targets, and you have, hell to pay if you don't. And in the VC world, I'm like, what's going on here? I just met a lot of people, haven't really done much with that. And then I realized this is a longer term business. You really don't want to have that much of an action bias, and you want to be a little bit more thoughtful. So that's when I worried about then. I've sold India as the most promised land for so many years. When is it going to happen? And then 2016 comes along, where you see, the Aadhaar penetration and, UPI and geo data rates and everything came together. And, now we can see 6, 7, 8 years later, the speed with which our companies are succeeding. So that was a question. You were wondering if you were really in the right market at all.
I love that. I don't know, but it seems there's an uncanny resemblance to a similar answer that Doug gave at a Stanford talk, where he talks about being fearful. Doug Leone. Yeah.
Doug Leone, we have the same hairstyle, but that's where the similarities end.
No, but it was a very similar answer of how he dreamt of being fired someday. Mm-hmm. And he talks about this, and I love how you've articulated this as well. That's lovely. For the final question, and this is fairly stereotypical, we take the guest down memory lane and maybe point to a pivotal date. So let's say the day you were leaving Bharti Airtel, right? If you could go back and write to yourself, and none of this is about regret, it's about condensing the knowledge that you've been able to gather in the last 18, 19 years and send it to yourself, and by extension to all of us. What would you tell yourself?
I'm going to do a hat tip to my wife. It's going to be something that you're not expecting. It would just be 2 words. Be kind.
Tell us more.
I think this world is too full of trying to be up and to the right all the time. It's okay to not be okay sometimes. It's not everybody has to be measured by 38. I was the CEO of some company and I arrived on some 40 under 40 list, or I got some particular $1 billion unicorn tag and showed up on the front page. We all know by the time we reach my age, that doesn't matter. But what matters is, your own self-esteem, your own self-worth. So be kind to yourself, please, to start. What matters is the authentic relationships that you have with everybody around you. Be kind to others around you. They've had a hard day. They've come through hell to be here with you. And I feel like just the simplicity of just being human first and then anything else is a reminder I would tell myself.
I love that. I don't think I could have expected a better end. This has been such a pleasure. It's been way more than I imagined, and I was extremely excited to learn from one of the best investors out there. What's happened is I've also learned from one of the most well-rounded humans out there. Thank you so much for being an absolute delight to host. I think I have personally learned a ton, and I'm sure a lot of people watching would have. Thank you so much for doing this.
Thank you, Jivraj. I told you this is my first ever podcast, so I've got butterflies on my tummy. I really hope in here you can do some magical editing to make sure that there's something useful for everyone watching.
Yeah. No, thank you so much. It's been a pleasure.
Thanks.
Thank you.
Hello. If you made it this far, you've probably watched the entire episode. And if you've done that, I'm really grateful. I and my team try to put in a lot of effort to ensure that we can bring the best quality content to you. So if you liked the episode, if you watched it thus far, my request to you is to share it with people, to subscribe to the channel, and to ensure that we can keep growing. We are everything and anything only because of you, our listeners. Thank you so much for tuning in. We'll keep bringing to you amazing content. Cheers.